Welcome back to the Real Estate Rundown, where we make sense of the headlines shaping money, markets, and mindset.
Send it.
First of all, this first story is quite interesting. The Maldives has banned smoking for anyone born after 2007.
Wow.
Can't smoke there.
Based on
Can't smoke
your
in Maldives,
age.
all right.
Wow. I mean, I guess the reason why talk about like age discrimination.
Well, it's interesting. California did something similar. So in California, if you're born, I believe it's 2009, because that's like when Abby was born.
You never learn it.
Yeah, if you're born after 2009, you can't buy cigarettes. So technically, you can't smoke. You can't buy.
You're gonna have to
tobacco.
buy them off the old people.
You're gonna have to there's gonna be like a
it's
black
gonna be
market.
like
Hey, man,
1930s,
there's totally gonna be a
1930s
black
again
market
for
for it.
cigarettes.
I know, right?
It causes people to want to do it because they're like, if they can't do it, they're like, oh, what am I missing out on?
Yeah, exactly.
This is a way to make sure that the older generation doesn't get pissed off at the politicians and vote them out, right? Like, hey, we're not gonna take away your cigarettes. You know, you've been smoking for the whole your life.
Totally.
You're gonna die off them.
Okay.
But we're gonna take this other generation and make it illegal, so they don't die off of it.
You know, like
Right.
the part that I get so perplexed and puzzled with this, especially, and of course we're going back to America here versus the Maldives, but like there's so much regulation around smoking, drinking, etc., but there's no regulation around food and crap food that kills you pretty much the same way.
In New
as
York.
a lot of that stuff.
Remember the big gulps? You
They were
couldn't
banned.
get you could only get like 20 ounces. They're the big gulps.
Oh, I don't
were
remember
banned.
that.
Soda,
No,
yeah.
I missed that.
Yeah.
I think the government just needs to stay out of it, right? I mean,
Right, but
I think
people
there needs
make
to be
dumb
some
decisions.
regulation.
And then when you come in with something like nicotine, which according to some experts is the most addictive substance, period. I've heard it's more addictive than like cocaine
Or heroin, yeah.
and so people are dumb, and you can go to a store and buy it. So like,
Well, and not only
Is it
that too,
bad?
like a lot of times, here's the really bad thing about, based on what you said, Jay, which there to me needs to be something done about this. Good quality food is more expensive. So if you take the overwhelming majority of the population that now is going to skew on the cheap, affordable buying food, right? Cheaper, crappy food is more affordable. So they're going to go do that. And that's your large, your red dyes, and all of the other stuff that exists now in a lot of this crap food.
so interesting. I was reading some statistics around SNAP benefits, and the average U.S. female weighs around 140 something pounds. The average U.S. female on SNAP benefits is around 200 pounds.
jeez.
And so there is like a massive weight discrepancy.
what I just said.
Is it the low quality food, packaged food?
Stop feeding them.
Well,
Feeding them.
and by the way, I don't necessarily think that SNAP benefits are bad. Like it's
No. Oh,
really
there's absolutely
sad
a place.
how many how many people aren't getting those right now because of the government shutdown. So
I didn't realize how there's like 12% of Americans that are on
That weirded
Yeah.
me
food
out
stamps.
too.
I mean, that is like high.
yeah.
That's
It
1 out of 10
seems like-
people, right? More than that.
Yeah.
Yeah, there was something that around Halloween time and trick or treating, there was actually some guidance that like, hey, give out some packs of ramen, and because you never know if the kid coming into your door is gonna have a meal.
Yeah, just eat candy for dinner. Huh?
That's a heavy statement.
Our family used to go to food. It wasn't. It was like a church thing where they would come in with food boxes, and my mom had like 4 young kids. We grew up like
Yeah.
fighting over a box of Pop-Tarts. Like, not kidding. Like, we would hide food from each other, and so we would go and So I'm grateful for those programs because they definitely benefited us when I was growing up.
I can relate. They benefited me when I was growing up.
Yeah.
Keith didn't experience as much because I'm a little older, but I think that they kind of made their way out of it at the time. But I can relate.
Keith's like, it's all good
He's
today.
like,
He's like, I ate good.
Well, Keith, what do you think about this? Because Scott Bessent issued a warning that the U.S. may be in a housing recession. So on Sunday, he was giving the State of the Union address, and he said that basically we've seen the biggest hindrance for housing, and that's mortgage rates. So if the Fed brings down mortgage rates, then they can end this housing recession.
Everybody is after Powell, aren't they? It is wild the fire that dude's getting. Sorry, I totally stole your thunder, but I'm like, man.
You didn't steal anything. I mean, it's just interesting times right now, right? You have an agency that is privately owned that somehow has power, not only obviously over the American economy, but at the end of the day, kind of what globally happens because
Absolutely.
everyone follows it.
Would this be the central bank that you're referring to?
the CB.
Yeah,
And the Fed.
and the Fed, that
The Fed is
that
privately
is
owned.
able to. Oh well, here's what we think. Should be done, whether our government agrees with it or not. Look, it's kind of like our government right now, based on results, literally can't do anything about it except for quote unquote I guess complain or, keep putting pressure on them. And I mean, it's obviously not working.
Not
But,
yet, right? Not yet.
So, yeah, I don't know. I mean, it's based on, seeing properties being bought and sold all across the country. I mean, I wouldn't say it's unhealthy, but there's no question, there's a lot of things that are stagnant because people are sitting on the sidelines because they are waiting for something better. I went and showed a new build, which is obviously really rare for me now, right? I just kind of, if someone's from my old clients, reach out to me, I'll go show it. So I went and showed some new builds a couple Sundays ago, and he was serious. But it literally came down to the rate, and even buying down the rate, it still put his payment about a little over $300 a month where he wanted to be. And so that was obviously his ultimate decision to not move forward. But it was close. I thought we had a deal.
Wow.
And it's because the rates. So if the rates went down, 100% he would have pulled the trigger, and he would have bought a new build. And
is he a current homeowner or is he renting?
He's a current homeowner.
Okay, so he would have been one that would have purchased and then added to the supply by selling potentially.
Yep.
Would he have sold or would he have rented?
What do you mean?
His
current house? No, he would have had to sell his current house to put his his $100,000+ down payment because he has a ton of equity. Because I helped him get it back in 2022, so it's worth quite a bit more than what he bought it for.
What is his rate in 2022? Do you know what his rate was in the current house?
No,
probably not great, right? 2022.
Well, if he purchased before April,
yeah,
it would have been.
I don't remember. He might have told me, and I don't remember that off the top of my head. But even using the new builders incentive, the 3% that they were giving to buy down the rate, still only brought the rate down to 5.2 something %, and that's with him having a rocking credit score. So it's not like he was like, eh. So
he's got an 800 credit score and still.
I think that's
still
happening with a lot of
5.
people. So I guess in regards to the housing market in a recession, I think people are going to continue to sit on the sidelines because there's a lot of talk with the current administration saying, first quarter next year, we're going to go all in and lower the rates and get things moving. And that's going to cause a lot of people to wait.
Wait, right. Yeah, we podcasted with Rick Mahone. We've been podcasting with Rick Mahone on Mondays. So maybe one Monday you'll have to come in and join us. And he was talking about this yesterday. And the same thing is that then the default for people just is wait, because something better is around the corner. If you think something better is around the corner, you're likely just to hang tight.
Yeah, it's the hurry up and wait. It's the anticipation, right? What's going to happen?
But you can get a great deal right now. And that's why I think that a lot of people are right now, we're getting a lot of offers that are just super low ball offers. Because they're just like, they take it, they don't. Right. I'll wait. No big deal, right?
Well, speaking of, was it you, Caleb, that told me showing time data has reported that their showings are up?
I did not. I did not share that.
I heard that somewhere.
Yeah.
So I'll verify that and report back.
Okay. So maybe showing data is coming in stronger.
Yeah, because that's always the leading indicator for me is when you see showing time start to spike up. Obviously, it's the best leading indicator.
Well, I think another good leading indicator is purchase mortgage applications, and I haven't looked at those in a few weeks. Let's take a quick look and see what purchase mortgage applications are doing.
Yeah, it's interesting. We'll see. I think now is the time where agents would say, "What date the rate? Wait, is it date the rate? Marry the house?"
Yeah.
Right. Yeah, because I just think it like when we were talking with Rick Mahone, as soon as the new Fed Gov comes in. Those rates are going to be slammed to the ground.
So yes, it is confirmed that yes, scheduled and past showing times are visible through Showing Time platform. Upcoming showings are visible in the active section of increased activity.
Okay, so showings are up. Purchase mortgage applications are up on the week ending October 24th. They were up 7%, but the but here is look at the weeks preceding that. They were massively down. So the week ending September 26th, they were down almost 13%. The week ending October 3rd, they were down almost 5%. The week ending October 10th, down 1.8%. So
was that all the hopefuls thinking that Powell was going to drop 50 basis points instead of a quarter?
No, I mean this is probably the 10-year Treasury. I guarantee this follows the 10-year Treasury because
the purchase mortgage applications
back in September. That's when the Treasury went down.
Treasury went down, and mortgage interest rates on the daily probably went down, and so we saw an influx of applications. And hopefully those people locked. Hopefully they got quotes and they locked in, and they're out there and they're home shopping right now because typically those locks are good for a specific duration in about 30 days. So That'd be cool. It'd be neat to see this continue to go up. And then, another question that Rick asked that I thought was a really good question is, if you have your house on the market over the holidays, should you consider delisting it? Should you pull it off the market and wait until January?
I, for one, am going to say no, because I think that sometimes it's about supply and demand and competition. And when there's a lot of other people that are going to be doing that exact same thing, you're going to give yourself a better look of the available buyers that are out there. Because I think a lot of times your people that got to buy are your best buyers versus the nice to have specific buyer. So if you can get in on that time frame, a lot of times, holidays are one thing, but timelines trump holidays. And if they're up against it and your house fits their needs, I want to be in the right place at the right time.
Well, obviously, it depends on the seller, right? If they have to sell or not. But
Sure.
and also, I think what I was saying the other day is it has to do with the markets too. Like Arizona is a great market for visitors to come in and look at houses during the holiday season. So
Right. It's beautiful here.
if you don't have your house available for sale, they're not going to look at it. So.
Yeah, not ones that they're just going to get packed full of snow and probably get reduced showings anyway.
Yeah, take
exactly.
those off
You're in
the market.
Minnesota, take it off.
If you're in the Midwest.
We've dealt with that a
Hibernate.
couple times where we're like, oh, didn't really think about that when we closed in November.
Yep, you ain't
and
selling
the
for
agent's
60
going,
days.
you need to do this for the house. You need to do this for the house. Thanks for the checklist and the reality check.
Yeah, the weathering the house.
Oh, and by the way, the contractor can't get out there for another 2 weeks because it's been raining and snowing every day. Cool.
The house is
You
frozen.
can't
And
put a
those
new
are just
roof on it when
sometimes-
there's 8 feet of snow on
Yeah,
top of
you
the
don't
roof.
think about that on the marketplace. So yeah, it definitely market specific, but I agree with Eliot overall. You never know. There's always a buyer around the corner at any given time, and when they're ready to go, you want to be that property. And
I just think also once this market loosens up and the rates do go down, all the extra things that people, the furniture stores, appliances,
Yes.
all this stuff, it's going to really pump the market really hard. There's a lot of money that comes in to the market when a house is bought. I don't know what the stats
Yes,
are.
I
but
have it here. This is
Yeah.
NAR's report of the economic impact of a single home sale. And average across the U.S., the economic impact of a home sale is $124,000.
That's incredible.
Yeah.
That is. It's
how
insane.
do they break that down?
Right there.
They break it down by all of the factors that go into a home sale. And just like Jason was explaining, so obviously you have your professionals that help that home close. So your realtors, your loan officers, your title officers, all of that economic activity.
The obvious ones.
Right. But then you have movers and utility companies, and, your typically
Furniture companies.
furniture, home,
Appliances.
goods and services, you're
Best Buy.
you're calling out
Home Depot.
handymen to do little renovations or repairs or fix things, So just a lot of money gets
Push.
invested into the economy every time a home changes hands. So when you think about where we're at, we talked about yesterday, we're at what, 2.8% turnover? It's insane.
Nuts.
It's like a 30-year low
Nuts.
in home sales. Meanwhile, our population has grown by 70 million. And so when you really
And jobs are low.
when you put that into perspective, Scott Besant's right. This really is a bit of a housing recession that we're
the
in.
whole point of not dropping the rate is to hedge against an inflation. But when jobs are down the way that they are, and we're talking about like real estate affecting this much income,
Yeah.
what do you think business owners and managers and et cetera hire on? Revenue. Do you think that a house that's going to drive revenue in an economy or in a certain sector is going to bring jobs? Duh. So like part of me on this whole thing is yes, I understand that inflation and hedging against that is a very real thing and we must pay attention to it. However, when you're talking about affecting one of the largest sectors in the U.S. economy around bringing in money and getting things to flow and circulate and jobs, et cetera, to me, this is a no-brainer. But
Yeah, I think if inflation's not about the housing market, it's about the U.S. government spending. And they're not going to stop.
We just hit
But,
38 trillion.
Yeah.
And we were 37 trillion not even 3 months ago.
Yeah, they're not stopping. Elon Musk tried.
Yep.
The
he
courts
pointed out
got,
how
the
to
courts
do
got
it.
in the
They
way
didn't-
and
yeah,
said,
they didn't
nope,
wanna make the adjustments.
we're not going to let you do it.
So
And
is the government shutdown a de facto Doge? I mean, it's
I think in some ways, yeah. But then there's courts saying like, oh no, you have to
you have to
pay out
fund
SNAP.
this, you have
Like,
to
well,
fund
what
this.
money then?
Yeah, with what? Just print it, Jay.
Yeah, let's print it.
Cool. Well, what causes inflation? Printing.
Yep.
Well, in other news, and speaking of mortgages, Robinhood has partnered with Sage Mortgage Loans for their gold members. So they're known for disrupting, and Robinhood's now trying to get into the mortgage business.
I'm a gold member.
Yeah, well, if you're a gold member, check out the sort of savings that you could get on a 30-year fixed rate.
Oh, wow.
So according to Sage, for gold members, the national average for a 30-year fixed right now is 6.28%. But if you're a gold member, you can get a 30-year for 5.526%.
All right.
So that's quite a considerable savings.
75 points, 75 basis points. That's crazy.
That's pretty awesome.
Yeah. I wonder what the
What the fine print is.
what the fine print
So
says. Oh, here we
you
go.
wondered, and so did Roman Empire on X. And here's what he found.
Yeah.
Is that it must be your primary residence. It needs to be
Okay,
a
well, that's
detached single-family home. You have to have a FICO of at least 780.
Okay.
The loan-to-value is 75%.
Ooh, 25%
Okay.
down. Okay.
That's all right.
And you can have no other agency loan level pricing adjustments. This probably cannot be used in combination with any other sort of buy downs.
Oh, gotcha. Okay. I mean, that's still good.
Yeah.
Wow.
Yeah,
Yeah.
you know, I mean,
It is still good.
but if you're a gold member on Robinhood, you're dealing with a different clientele. You're not dealing with just the next person on the street trying to buy a mortgage,
Yeah.
right? They have investments. They're spending money to be a part of that ecosystem for particular reasons, whether they're trading or long-term holders. So I think it's pretty cool. It could be another way to incentivize, a couple more people to purchase a property.
Yeah.
And get a good rate.
Mm-hmm.
We were listening to the CEO of Better on, what was he on? Was he on CNBC?
CNBC, yeah.
He was on CNBC. And it's funny too, because like that guy has had a lot of controversy over the years. Like remember when he fired
yeah.
like 1,000 people on Zoom?
I was via Zoom and did it
Remember
heart
that?
rate.
Yeah,
And
that was crazy.
He was super
The blowback was
insensitive
wild.
and the blowback was insane. But you know what? He like just
powered
got
through.
over it. He powered through that. And,
did.
He
and
hid
so
for a while.
He did.
Yeah, he had a temporary leave of absence by the board.
Oh yeah, yeah.
remember that?
Let's put you in the timeout corner for
Yeah.
a minute and make you wear the
Even
hat.
though him and the board are the ones that made the decision. Sidebar.
Well,
Sidebar.
he's the one that executed it terribly.
Fair.
Right. Anywho, he was on CNBC and he was talking about Better and how he was talking about all of the ways that they're using AI to process home loans, 10 times faster than the archaic mortgage companies. And he was describing the mortgage processing system that most mortgage companies use and how it is so archaic that only one person can be in a file at a time. And so he's like, imagine like calling up someone and saying like, hey, you're in this file looking at it. I need to get in and look at it. Could you get out of it so I can get in and look at it? And so he's saying that because of the way they process these mortgages faster, they are much less expensive and they can give better rates.
And
I'm
they're
wondering
better?
how much is BS. Like,
And they're better.
yeah, and they're better. Yeah.
Yeah, you just don't know, not being in the mortgage
For me,
business.
you want to talk
Yeah.
about an industry that I've thought for a decade that is just massively ripe for disruption is the mortgage origination industry, because it is not, especially by AI is what I'm referring to, because it's not super belly to belly anymore. Most of the time it's appointed by a trusted other source. You never meet the mortgage person. And there's not a whole lot that AI cannot do that mortgage person does.
I think mortgages are scams.
Scams.
I mean,
I don't think they're scams.
well,
It's ridiculous.
okay. Think about this. I can go. There's a Mercedes dealership right there.
Okay,
I can
and-
go buy a $200,000 truck with like nothing,
True.
and
Get
have
approved.
it today.
Yeah.
And that thing drives around. It goes all over the place.
Yep.
And,
And
I
it
get
loses-
a loan,
and it
it's a
loses
depreciating
value.
asset.
asset on top of it. It's
But
depreciating.
I can't buy a $200,000 condo right there without 30 days and then them doing
Yep.
a
Yeah.
freaking crazy
A
amount of
financial
things.
surgery.
And yeah,
And the
it's
documentation.
a scam.
Yeah.
From that level,
it's-
yes, I agree.
Give me a break. It sits there. The asset sits there. It's real estate. It's an appreciating asset.
Well, Jay, and on today's technology, how many jobs out there like are once you know their credit score, like you could get approved, and the car industry does it all the time, right? Where they know how much money you make. Not all jobs, but a majority of them. They know a plus or minus how much you make. They know your credit score. They know your financial history, right? All of these
Yeah.
things are just readily available in seconds.
So is the difference the securitization
Yes.
of the real estate by a secondary market, right? You're gonna if you
By a
go
secondary
and you
market,
buy
and
that
the government, pretty
$200,000
much.
Mercedes, that Mercedes isn't then going to take
No.
that $200,000
It's
loan
held by the bank.
and
And
sell it and securitize
right, it's
that
held
and
by the
package it up with a bunch of other people. And so I think that the difference is with real estate is they had to standardize a way so that when an investor buys these mortgage-backed securities, they really understand what they're investing in. Because if
Whoa.
you could imagine, you have this conglomeration, right? And
There's
so
truth to that.
Well, we know that was a scam all in itself.
Yeah, we know that is too.
I mean, just watch
that's
the,
the next
the
level
good
scam.
news, or not the good news. If you haven't
Fannie
seen
Freddie.
The Big Short, of course, right, there may be a little bit of fantasy with
Oh,
how
for
some of it
sure.
went down, but it does a good job of depicting the fraud and just how they just made it all up and threw it all in and lied about the quality of the loans, which is why it happened. So anyway, yeah, I don't know. I mean, I get that part of it too, but I still think that part's BS as well.
It is. And there needs to be some innovation on that front. And,
Agreed.
you think about like, though, the processing timelines, I could go on my chat GPT and I could create a custom GPT and inside an hour, I could probably have a mortgage underwriter based on all of Fannie and Freddie guidelines. And I could probably throw in any scenario of a borrower and get back a very clean list of everything that I would need in order for this person to be approved. And so that, going back to that conversation we heard of the CEO of Better on CNBC, I kind of believe him.
It makes logical sense to me.
It does. It makes sense to me too, but it'll be really interesting to see how they perform because the loan officers have these relationships with the real estate agents. And so what typically happens is when someone wants to buy a house, they go to the real estate agent, they want to go home shopping. The real estate agent says like, oh, let me get you approved.
Yep.
Here's a great lender or 3. We're supposed to recommend multiples. And then they go shop. And so is Better going to be able to go build relationships with real estate agents that are then going to refer their clients to them?
That'll be the
I don't know. I mean, I find it curious, right? Because you take the biggest fish in that arena, Rocket, and Rocket smashes it by going directly to consumer, right? Through commercials, through advertising. They don't have a lot of relationships, right? That's a lot of like a lot of your LOs go learn to run volume, learn how to become a good LO at Rocket, but then they realize they're stepping over a lot of money and go do a lot less loans, but then they learn how to build relationships because it is the belly-to-belly interaction of the real estate agent and whatever those relationships are that they have. But Rocket, again, smashes it with refis and all of those types of things. So I don't know. I think again, when the more people learn that there is a better way, pun intended, and that better way is cost effectiveness. Because really, at the end of the day, let's face it, most consumers, when it comes to those types of things, 95% of your decision is based on money.
Well, speaking of mortgages, adjustable rate mortgages are making a strong comeback. Last month, 10% of all conventional loans had an adjustable rate. 14% of all new builds had an adjustable rate. And so,
perfect sense.
I mean, buyers must be very optimistic about the future of mortgage rates if they're opting into these.
I just think that a lot of people do what feels right in the moment and they worry about it later. I think that's what's going on.
Buy now, pray later.
And yeah, we'll figure it out later, right? It's cheaper now. We'll worry about 3 years down the road when that happens. And then that happens or whatever their, of course, right, terms are. And then it's like, uh-oh.
Oops.
Perfectly said, Keith. I couldn't agree more that everybody
think that's what's happening.
Makes a decision based on the moment.
We can't end today's podcast without talking about Bitcoin because we are all very big Bitcoin believers here and it's having a bit of a dip.
The market's crashing, sell, get out.
No.
Bitcoin
I told
just
you.
below 100,000.
It just hit?
Just hit below 100,000 2 minutes ago.
You know what?
Oh, really?
I saw lots of, I'll use the word influencers.
Oh, yes. I see
on X saying that was going to happen. And I was like, man, I don't know.
Well, it broke the 50 EMA, which is the exponential moving
there are
average,
some people,
and the new support lines are like $98,000. So that
I've seen as low as 88.
No, I haven't heard anything that low, but
okay, well, I'll send you some stuff.
So
I don't want that to happen. I'm just saying
that
if it happens, they're not saying like the market's over. They're just saying get ready for max pain. Don't get shook out, and when the tide turns, the leg up from that will be
It's Tom Lee.
Boom.
Or just Tom.
And then you have even.
Oh, is that Tom Lee?
Yeah, well, that too, and then you have Eric going 50 to 200K by the end of the year, right? I mean, again, these are just.
Whew, I mean, after this, if we go through a run like that, that'd be wild.
Well, not really. I mean, you see some of the other cycles. Before the big run-ups, there's been a big giant dip. I think there was one that I was watching. I was watching a chart where it went down to $120, and then within like a month, it was at like $1,100.
Wow!
So it went from like 280 or something like that to 120, and then it went to freaking 11.
But those are the early days of crazy volatility, which I think you can still get into that type of volatility right now with Solana.
Look at what gold
XRP.
did. I mean, gold added like $3 trillion in like a couple weeks, and I mean, Bitcoin's only $2 trillion market cap.
The whole market cap.
Yeah,
entirely right.
I mean, you don't think that you could easily double the market cap of Bitcoin in a few weeks. It could happen.
A few months, few weeks.
Yeah.
Well, what I've been hearing is that the difference between maybe past cycles and this cycle is the institutional investment, so the ETFs, and then also these Bitcoin treasury companies. And so are we seeing the fundamentals of Bitcoin shifting because we don't have the retail investor as the main purchaser and holder,
Which was
and
what
seller,
was going on in the
which
past.
is exactly,
Right.
which is what was going on in the past.
Now it's
So are we
companies.
shaking out retail?
I think a big part of that is happening from what I'm seeing on X, right? Because it's crypto Twitter, if you will. The all the long and the shorts, just if you do it wrong and is really risky, just liquidated, and and a lot of people they think that's just what's happening right now.
Hold, hodl, hold on for dear
Yeah.
life. That's not actually what it stands for. What does the acronym actually stand for?
I don't know.
You don't know?
Hold on for
For
one more
life.
day.
I'm gonna look it up because
Yeah. It's
I guess it does say it is.
yeah.
Hold
I
on for
think-
dear life.
To me,
Huddle.
it's one of those things like a lot of the people I plug into on this is you have to believe in what you're investing in, and like there is a financial regime that is going to change hands, right? And as we move into AI, as we move into a digital environment, right? To me, the writing is on the wall. It's, do you have the stomach to play the long game? I mean, don't get me wrong. If you're trying to day trade, swing trade, it's risky business and very difficult. But at the end of the day, if you have a 5-year plan,
You hit the
still don't see how you
roadcaster,
can
it's
go
like
wrong.
tweeting right now. Did you turn it off? All right, it went off.
Okay.
It was like there's like birds tweeting right there. I'm
Sorry,
sorry.
Elliot, will
You
you
dropped his
please?
phone on the roadcaster.
That's right. You're talking, nobody's hearing you.
No, you couldn't hear it. I was hearing it. All you heard was birds tweeting because he hit one of those.
Oh,
things.
got it.
It was all tweet like that. So in my ear.
It's trying to say boring,
funny, too funny.
boring.
No. No, it's because that's all I was hearing. So that's what I was going to show on the podcast here.
Well, Jason, why Bitcoin?
Why Bitcoin? So for me, it's not about what I'm buying; it's what I'm buying against. And this, I have this U.S. debt clock on my phone, and you just see how fast we
The
are
debt.
going into debt.
It's insane.
And eventually the government will have to reduce that. And how do they reduce that? They don't reduce it by reducing it. They reduce it by devaluing the dollar. And that's what they're going to do.
Yeah,
A lot-
and with the current administration, Bitcoin,
Oh, yeah.
XRP, Solana, Litecoin, and Ethereum, and I think there was one more, for the strategic reserves. It hasn't really happened at a super high level yet, but when all that happens, that's where the
XLM.
tide's going to turn.
Forget about it, right? Things are changing. So much going on in the world today. What do you think? Drop us a comment, and thanks for tuning in.